Hello, and welcome to today's episode, where we're diving into the fascinating world of blockchain technology and its role in preventing bank fraud. In our digital age, where online transactions are as routine as our morning coffee, safeguarding against fraud isn't just a corporate duty. It's a necessity for protecting everyone involved, consumers and businesses alike. So, let's explore how blockchain is shaking up the landscape of bank fraud prevention. I've had the privilege of teaching over 500 professionals in this field, and today, I'm excited to share some of the insights and practical tips I've gathered along the way. We'll move beyond the technical details and into the real-world applications that make blockchain such a game changer. Now, you might be wondering, what sets this guide apart from others? Well, while many discussions around blockchain focus on its potential, they often miss the mark when it comes to real-world application, especially in fraud prevention. That's where this conversation fills the gap. It's all about bridging the promise of blockchain with its practical deployment, focusing on how it integrates with existing banking systems to prevent fraud effectively. Let's start by understanding the foundational elements of blockchain that make it so effective against fraud. 3 core attributes stand out: decentralization, immutability, and transparency. These aren't just buzzwords. They are the pillars supporting blockchain's robust, fraud-resistant capabilities. First, decentralization. Unlike traditional banking systems that rely heavily on a central authority, blockchain operates on a decentralized network of nodes. This reduces single points of failure, making it exponentially harder for fraudsters to alter transaction records. Even if a few nodes are compromised, the network's consensus mechanisms maintain its integrity. This redundancy offers a level of security that centralized systems simply can't match. Next, we have immutability. Once a transaction is recorded on the blockchain, it cannot be altered. This means fraudulent transactions are easily traceable, providing a clear audit trail. The cryptographic hashing that secures each block creates a chain of evidence that's nearly impossible to manipulate without detection. It's like having a digital fortress that guards transaction history. And finally, transparency. On a blockchain, all transactions are visible to its participants, which enhances accountability and builds trust. This shared visibility acts as a powerful deterrent against fraud. Yet despite this transparency, privacy remains intact, thanks to sophisticated cryptographic techniques that protect sensitive information. It's this balance that makes blockchain both transparent and secure. The combination of these attributes creates a proactive and reactive fraud prevention ecosystem, capable of stopping fraud before it happens and investigating it thoroughly afterward. Moving from theory to practice, recent trends in the finance industry show that banks using blockchain can drastically cut down on fraud-related losses and transaction costs. A consistent pattern emerges. The intelligent integration of blockchain with existing anti-fraud measures pays off. For example, JP Chase, a financial giant, has adopted blockchain to enhance its cross-border payments, reducing fraud risk significantly. By using a distributed ledger, they can verify transactions in real time, preventing fraud before it occurs. This not only boosts security, but also speeds up transaction times, benefiting both the bank and its clients. This example illustrates a crucial point. Blockchain's effectiveness is amplified when integrated thoughtfully with existing systems, rather than being used as a standalone solution. JP Morgan's JPM Coin initiative showcases how blockchain can facilitate institutional money transfers while maintaining the necessary security and compliance standards. Speaking of compliance, blockchain plays a significant role here too, particularly in adhering to anti-money laundering regulations and improving KYC processes. In a country like the United States, with stringent financial regulations, blockchain offers a highly effective way to monitor and report suspicious activities. It can even help institutions cut compliance costs by up to 50% in some cases. The benefits extend beyond just saving money. Blockchain creates an immutable record of due diligence activities, giving regulators unprecedented visibility into compliance efforts. This can reduce the time and resources needed for regulatory examinations and improve the quality of compliance reporting. Now, let me share some advanced insights and pro tips from my experience teaching this technology. The true potential of blockchain lies not just in its technological capabilities, but in its strategic application. One powerful approach is integrating blockchain with artificial intelligence for predictive power. Many people don't realize that while blockchain provides a secure, immutable ledger, AI adds the intelligence needed to sift through it. Combining these technologies can dramatically enhance fraud detection capabilities. AI excels at processing vast amounts of data in real time, flagging anomalies that human analysts might miss. When used in tandem with blockchain, AI can analyze transaction data, identify suspicious patterns, and flag potential fraud almost instantly. Here's a key insight. AI-powered fraud detection systems can achieve accuracy rates of 95%, significantly outperforming traditional methods. With blockchain, these AI systems train on verified, tamper-proof datasets, improving model accuracy over time. The feedback loop created by blockchain's data integrity and AI's processing power makes a compelling case for combining these technologies. So, what can you do to leverage this synergy? Start by implementing machine learning algorithms that analyze blockchain transaction patterns. The immutable nature of blockchain ensures your AI models work with clean, reliable data, enhancing their effectiveness. We're living in a rapidly evolving digital world, and blockchain presents us with some of the most exciting opportunities to combat fraud in banking. By understanding its foundational elements, strategic integration, and potential when combined with AI, we can create a future where digital transactions are as safe as they are convenient. Thank you for joining me today as we unpacked the role of blockchain in bank fraud prevention. I hope you found this insightful and inspiring. Until next time, stay curious and keep exploring the fascinating world of technology.